Professor, it's so great to talk to you on this. Do you agree? Would she make a great Treasury Secretary?
I think so, yeah. I mean, I have no idea if President-elect Biden is going to choose her. They're not telling me anything about that, but I agree that she's very well suited to the job. She'd do it very well if she gets it.
Do you think in that situation that we could see monetary policy and fiscal policy working more closely together? We're certainly seeing that here in the UK at the moment with the Treasury and the Bank of England.
Very, very much so. Now, there's a danger there. You don't want to get too close. There's a separation, which Janet Yellen knows better than anybody, a necessary separation between the executive branch or the legislative branch and the central bank. But in terms of close cooperation on things that are of common interest, like the Fed's liquidity facilities and many other things, it's hard to imagine a tighter relationship than Janet Yellen and Jay Powell, for example.
Well, fair point. And the other question is what it means for Lael Brainerd, who is also reportedly in the running for U.S. Treasury Secretary. But either way, it looks like enhanced cooperation. Do you think something like that is enough to do things like extend all the Fed programs past December, things like definitely getting some kind of stimulus done?
Well, the stimulus done, that's in the hands of the Congress, but extending the liquidity facilities past December. Look, I don't see why Steve Mnuchin is hesitating on that for 1 millisecond, but apparently he is. But if there's a change at the Treasury to Janet Yellen, to Lael Brainerd, and you could keep listing other candidates, I don't think there'll be any hesitation. It's borderline crazy to stop those things now.
Borderline crazy. Okay, why is that? What do you expect from the economy between now and January? We saw today with the retail sales number an indication perhaps that the COVID restrictions are starting to have an effect, and that is being done at a time when we don't have that stimulus that we did have earlier on in the year. How bad could those sorts of numbers get, do you think, between now and the end of the year?
We don't know, but they could get very bad if we don't have another package. I want to correct one thing you said. I don't think it's COVID restrictions that are doing it. It's the voluntary actions of people that don't want to get sick and die. People were afraid in March, and they're afraid again now. And that kind of thing can wear on consumer spending on the economy more broadly. To your question about borderline crazy, the Fed has been amazingly successful without putting much money at risk in backstopping the municipal bond market, the corporate bond market, and several other things without really putting much money on the line, but putting their pledge on the line that will be there if necessary. Why in the world would anybody dream about taking away that pledge now?
And you're really echoing what Vice Chair Rich Clarida said yesterday that the markets kind of glommed onto. He said the Federal Reserve is committed to using all of our available tools, not just the federal funds rate and forward guidance, but also large-scale asset purchases to achieve our dual mandate goal. JP Morgan kind of after this change, or right before this actually, changed their Fed call and sees more Fed bond buying come December by about $80 billion. A, do you think that that's going to make the difference without stimulus? And B, what does it do, I guess?
I think the answer to your question is a tiny difference. The Fed is grasping for straws now. It's shot almost, I won't say it's shot its entire wad, but it's shot most of its wad. It can do a little more. And what Rich Clarida mentioned is one of those little bit mores that it can do, buy more bonds than even that it's buying now. I think you have to be incredibly optimistic or trying to put on a brave face, which is what I'd be doing. I'd be doing what Clarida is doing if I was vice chairman of the Fed now, putting on a brave face. But realistically, it would be a positive for the economy, but a very small positive.
Alan, one of the things the Fed could do, now that it's no longer really supporting market function, is extend the duration of the bonds that it's buying. Do you think that is a logical next step? Absolutely.
I think those are the two. You've now hit the two most likely things the Fed will do if it feels it needs to do more, and that's tied up with whether there's a fiscal package. Buy more and buy longer. There's no really reason that the Fed, you know, by historical standards, the Fed is buying out the yield curve. It usually is dealing with Treasury bills, but it could go a lot further than it is, and that would have some marginal positive effect on long-term interest rates. But look, the 10-year bond rate in recent months has been 0.7, 0.8, 0.9. I think right now it's about 0.9. You know, you have to ask how much lower could it be pushed? The answer is somewhat lower. But if you believe, as I do, and as the Fed has said many times, it's not going for negative rates at the short end. It's not obvious that you could go very much lower on the long end, even by, you know, concentrating more purchases out there. Don't get me wrong, I think they should, but I don't think we should have high expectations of how much good that will do.
Today, we're going to see a procedural motion in the Senate to approve President Trump's Fed nominee, Judy Shelton. If this goes through, which is a question, do you think that this changes the Fed's calculus at all, changes how they're thinking about monetary policy?
Not much. She'll be, if she gets on the Fed, which I hope she won't, Shelton will be one vote on the Federal Open Market Committee, and she won't take many people with her. She's the only one, really, that has the kind of beliefs that she has. But maybe a tiny bit in that the Fed might think, if we're going to do more, maybe we should do this before we have Judy Shelton voting. Maybe, but not a major effect. But if there is an effect, I think it would be in that way.
Just a kind of broad kind of thought on this. Do you think there's ever been a point, do you think there is a point where the Fed has suffered from groupthink? And as a result of which, do you think a more diverse group of people may actually be a desirable outcome at this point?
I do think. I think there have been many times when the Fed suffered from groupthink. In fact, it looked that way to me when I joined the Fed in the mid-90s. I joined, and Janet Yellen, by the way, joined right after I did. We were the first Democrats to go over there in like a dozen years or something, and there was, I think, groupthink, and I think it is good to have diversity. Look, that's why we have staggered terms, and the idea is a president gets to make some appointments, but there's a long way between that and putting somebody from the economic equivalent of the Flat Earth Society on the board. I mean, those kinds of views are not going to be taken seriously. A serious conservative or a serious, more liberal voice on the committee might have some effect. And I think in any case, it will be salutary in terms of getting away from groupthink. But somebody that's way out in left field or way out in right field is just not going to be relevant to the debate. There may be more dissents. You could see someone like that dissenting all the time from the majority view, and the Fed would rather not have that, but it's not going to really influence the debate.
Something that also may come up under a Biden administration is regulation. Now, you were really focused on bank supervision and regulation and consumer and community affairs, derivative instruments when you were at the Fed.
Yes.
Do you expect more oversight of, say, big banks, regional, private equity, hedge funds, non-banks? What do you think?
Well, that was a long list. So let's start with the place where I don't think it will change, which is the big banks. The big banks have been under the Fed's supervisory umbrella for a long time now, with not much ambiguity since Dodd-Frank. Before Dodd-Frank, there was a lot of ambiguity about who was really the principal regulator of these giant institutions. There's no ambiguity now. It's the Fed now. It'll be the Fed under the Biden administration. Then you reeled off a bunch of other institutions ranging all the way to hedge funds, which are not regulated by anybody, basically. And it's conceivable that the Biden administration would like to extend the regulatory umbrella to embody some of these other institutions, depending on the details, but likely it'll need congressional authority to do that. And as we all know, if the Republican majority stays there with Mitch McConnell acting like a cement block, the prospects for doing that are pretty poor. So the question will be, what can you actually do with the regulatory authority that exists? And I don't mean to demean that. You can go a long way. We now have, leaving aside the Fed, which takes it much more seriously, a bunch of deregulatory regulators. And if you put in place people that believe that the financial system needs regulation under the same laws that exist now, I think it can make a very big difference.
Alan, just a very final quick question from me. We've just seen the NAHB home builder index come through at a record. Do you think the Fed can ever step away from supporting the housing market?
Ever is a long time, so I guess the way you phrase it, I'll say
Yep.
Yes, but it's not on the near-term horizon. Look, the way the Fed supports the housing market is basically by keeping interest rates very low, and that's not going to end for quite a long time. And secondarily, by including MBS in its quantitative easing, which helps the MBS market enormously, and that in turn helps the mortgage market. The Fed's not stepping away from that for a while also for a number of reasons, but I think the principal one is, which a lot of people still don't understand, is the Federal Reserve Act gives the Fed a very limited menu of assets it could buy. The ECB's menu is much broader. The Bank of Japan's menu is far, far broader. The Fed is highly restricted in terms of what other than Treasury issues it can buy, but one of those things are the MBS of Fannie and Freddie. And as long as it needs to buy assets, it's going to want to keep buying them.
Alan, really appreciate your time today. Thank you very much indeed for sharing it with us. Alan Blinder, former Fed Vice Chair. Thank you very much.